is a funny instruction course where actually I am speaking on the entire topic because Arvind has excused himself. He has some issues. So we were the two speakers. So we can start the instruction course, and you can keep the timer at 1 hour 5 minutes.
1 hour 5 minutes. Yeah. So it is my extreme honor to be welcoming Dr. Debashish Bhattacharya, sir. He needs no introduction. He's a man who thinks differently. And sir, over to you, sir.
Thank you, Priyam. Thank you so much.
Pleasure, sir. Karanji, timer at 1 hour 5 minutes.
Yes, Priyam.
Right. The first thing as patient, as doctors, what we ask ourselves that what do the patients want? Well, definitely they want everything. They want the most convenient time. They want the best doctor. They want the maximum chair time. They want it maybe even at their home. But so it is probably not the best question to ask. The best question probably is to ask what is the patient willing to pay for? Because that is the real crux of the whole thing in our context. And so essentially, if it is affordable, it is there. If it is not affordable, it is not there. But essentially, it is a journey from affordability to aspirations for any patient experience from our side as well as from the patient side. And if you ask me straight away that what has been your learning over the years, I would say that the patient would be very happy to spend 1 day per capita for OPD expenses, 1 month per capita for a cataract surgery, or if you put it otherwise, it depends on location to location. So I would say it's 3 times the square feet area of a residential property. So if it is 4,000 rupees, 3,000 rupees, it is 12,000 rupees. If it is 8,000 rupees, it's 25,000 rupees. And another thing that I always, we have understood that the staff should be able to afford the standard package treatment of the hospital. Many of the hospitals, I find that the staff have to be rationalized. That is not effective pricing. If we come to the entire cataract scenario, I think we have done exceptionally well, because here we are given at our GDP, we are an outlier. I mean, never has it that we are, no other country is there, except for Nepal, which is, they do a lot of Indian cataracts along the border. So that's it. And so what does it teach us? And then we see that what is the population? Are we ending up at a point where cataracts are drying up? Demography that follows. So the demography looks pretty encouraging, that the people between 45 to 55 or 55 to 64, there is a good reasonable target to follow. If we see our vision at operation, well, almost about 60% have vision of 612 or better in the operation I do before operation. So, I mean, how much more can you take it further? And in fact, if you see from 2018 to 19 to 20, it hasn't improved that much. It might seem a little depressing, but there are many other areas where we can improve upon. Now, let us see that why I insist on affordability, because I know I'm giving this lecture to young people, and because this is the best point. If you pick up the affordable class to serve, you break even quickly, you get an recognition from them early because they are the aspiring lot, the people who are in the lower bracket of the social pyramid. So essentially, if we see the industry, the best figures are available from the industry. 35 lakhs of the 65 lakh cataracts that we do, more than 50% belong to the, they are lenses between 70 rupees to 200 rupees. And they are probably packaged at 8,000 rupees. And the monthly range of salary is 0 to 8,000 in this bracket. Then we come to another 40% whose income range varies between 8,000 to 24,000. And here you see the Indian hydrophilic and the foreign lens segment. And then we have the premium package of 10% population, and which are anything above 1.5 lakhs per annum, per month. So we would be very comfortable placing ourselves here because you can move both ways. You can go down, you can move up. So essentially, it is a very sweet spot to be. So if we see, take for example, the Disha example, you would see that most of our surgeries are around this bracket, and our average cataract surgery package is 17,800 across the board, and our average OPD spend is 720 rupees, where an additional 500 to 600 rupees are spent to complete the investigation or a medical purchase or a spectacle pre-booking. So this is a very important area that we need to understand. Just see, we do only 3,37,000. These are industry statistics, so it is very reliable. And here again, a major part, 50% is Avastin. Though in my state, Avastin is not given as it is not approved by the government. So essentially, but the fact remains that only 3,37,000 injections, which is only 1/20th of the total cataract volume. Whereas in the developed world, it is 1 to 2 times of the cataract surgery. I mean, in America, they give 6 lakh anti-VEGF injections. So, I mean, okay, they might have more AMDs. They are following the tight protocols of ETDRS, and so they might be giving injections more frequently. But all taken together, what it focuses is that we need to take this up seriously, and this can only evolve through comprehensive eye care. Because if we give, can you mute yourself, somebody? Can I request the conductor to mute everybody else? Excuse me. So this is a very important area because, when we get into start and planning a practice, we need to understand that how many patients would give how many interventions, then what is the usual industry standards, or what is the usual practice standards. So every second patient would buy medicines. Every third patient probably would need investigation. Every 16th or maybe every 10th patient may be making a spectacle. OCT is 1 in 10. Of course, it depends upon the rates that you offer. And so essentially, this is how you can plan your investigations. and your interventions. So in cataract, it is, you need to see 15 patients. I mean, if some, most of us, most OPDs, most doctors subsidize at the OPD level. So suppose they are subsidizing 200 rupees at the OPD cost. So essentially, it is 3,000 rupees subsidized at the OPD before they come to operate a cataract. They are 30,000 rupees subsidizing for a retina injection. So, I mean, of course, these numbers, as I told you, have to improve. So these are we need to understand, these are big data, like from Disha. So naturally, data of 12 lakh patients over 5 years time. So that's good 60 lakh patients intervention ratio. So essentially, can we have this one? Essentially, as we move ahead into practice, the first 1 to 6 years, I think we need to create a brand value. We need to learn the nuances of practice. So we have to join another practice or work in another hospital or an NGO hospital. And this should be essentially closer to the area of practice if you have already decided to take up your individual practice as a goal of life in the years to come. And during this same time, you could also start your evening clinics and a surgery center visit where you operate your cases. There are many centers who would let out, especially single practices, they let out to operate younger surgeons. And then you start your own setups. There are certain critical numbers. I'll come to that. And then it would be, this is a stage when you start collaborating because then you have the strength. You need the power to do a right kind of collaboration. It is not out of desperation or out of sheer need or, to go ahead with time. It is with then you can take up group practices, and from 25 and 30 years into practice, I think one needs at the age of 58 start thinking of phasing your practice, whether you're going to hand it over the practice, whether you're going to have a joint venture and enter a retirement practice. So all this becomes important. Now, where? Then comes the question where. So it must have a growing elderly population, and there must be young people to support because the economy should be okay. Usually the city fringes are very good areas. If we talk about underserved areas, or maybe there's a retiring big practice, you could strategically locate yourself there. And the place itself must be expandable, must be accessible, and must be a visible location. So expandable is important because we have to go brick by brick. Now, how? You have to dig deep into the data. That's why I showed some of the preliminary data. And this decides the where and what. And we have to make a realistic choice to locate our practice as to which segment we want to serve. And the offering, try to be unique. Don't try to be the best and don't aim to be the largest or the biggest. That follows or happens in its own way. But try to give something which people really want. And this uniqueness comes from what people really want. Like if you say IKEA, furniture brand of from the Norwegian country. I mean, it is top class furniture, but it's for young people maybe, and you have to come and assemble the furniture. You have to buy the entire dismantled furniture from the store itself. there's no service. So all this makes it a very unique product, and young people like it. I see my children very inclined to this and very excited that IKEA is coming to India. So there's a unique offering in the whole thing. So think of the uniqueness and compete with the competitors on your strengths and try to strengthen them further, because it's easier to strengthen your strengths rather than overcoming your weaknesses. And as I said, we should go brick by brick, focus on systems, because whatever small or big you start with, you should start small. You must have systems and start training at a very early stage. From the systems come evaluation, and you get the results, get the data, improve, recruit, replace, design it into an incremental value chain. And obviously, at some stage, you need the retirement, collaboration, mergers to be considered. So essentially, fair price is a beginning for me. And transparency is obviously, we better be transparent. And these two things combined would bring in faith, which will make the aspiration for the community to ask for your service, and the compliance become all the more better if it is fair price. And this gives a very strong, if you surprise them with your price, the word of mouth becomes automatic. How often have you heard the doctor did not charge any fees? I said, how does he survive? But then he's a good doctor because he didn't charge any fees. I mean, that's very difficult to assimilate. But fair price is much more associated with our business than with anything else, and this promotes growth. And with a little social and a PR marketing, we can get the scales to imbibe technology, put in systems, as I said, from the first chain, and create the value chain and take it up the order to replicate and perpetuate. Well, as I said, when would you start? You are in the chamber surgery center stage. Until you have 30 patients a day, or maybe at least 20 to begin with, if you are more adventurous. I mean, they should be branded and they should follow you. So then you can have, it makes sense to have a OPD and a small structure, a hospital of 3,000 or 2,000 square feet. And then it can slowly grow into a 3-doctor setup. So it's 3,000 and the revenue. So generally in private practice, you would see a doctor generating 1 crore of revenue, crore to crore and a half, because there are other additional costs, as we will see as we go down the line. And then the divert could be that you can actually bloom into a full-fledged multi-speciality eye hospital, or you could just scale up to a second hospital in a location where from your patients come. And at the real scale of having a full multi-speciality hospital would require 400 patients a day. But first thing, even when you are, can I have the timer here? Even when you are managing your home finances, do have a profit and loss, where the profit is the income coming to your income and the expenses. So, and you have your wealth. So if you tag in the wealth and balance it out, it forms the balance sheet, and this is the profit and loss. So micromanage everything, and you will probably get into the intricacies of these things. These figures may look big, but it isn't all that big. So essentially what you see that a small practice which sees 5 patients in the OPD per day, this is a surgery center, this is a chamber with going to a surgery center model. The revenue is 17 lakhs and the doctor's income over expense is this, and his monthly income is 72,000. Fair enough to start with, even with 5 patients a day. But the only catch here is I've calculated with intervention for cataract as 15 for every 15 patients in the OPD, you get one cataract, which may be very difficult. And so this is the monthly income. And so this profit and loss, you can have a snapshot, you can keep it. These are all the heads that are there in Disha accounts for our profit and loss. And this is something I insist upon. Now the balance sheet, always they say that the liability should be equal to the assets. So what is a balance sheet? Is what you own and what you owe. So essentially the liabilities have to balance the assets. Now, how does it work in business? I showed you the profit and loss. So in that you will be profit. If you are in profit, it will come to the reserve and surplus. And suppose you have taken a loan. So with the loan, it will show it in the liability, but it will come in your assets, somewhere in your assets. Yeah, so it will come here. So with the loan, you have done something. Or if you have not done something, it will be there in your finance. It will be in cash or cash equivalents. So this is how balance sheet gives you an entire picture of your cash flows, your wealth, your assets, your liabilities. So it is basically what you owe and what you own. So this is a whole lot of things that a balance sheet informs you on, and please go through it. It is elaborate and it will be time consuming if I go ahead and start explaining all of this. Now let us see an OPD example. Now we come to a bigger setup where the doctor is seeing 20 to 30 patients and has decided to do a hospital of his own. That's fantastic. And so his fixed cost for 1,000 square feet building is 75 lakhs, and he has an additional, and he's put in an OPD equipment of 25 lakhs. So all this with the staff salaries and with the infrastructure, which is actually, I have kept the infrastructure recoverable at 10 years and the instruments recoverable at 3 years. So it comes to, I mean, with his cost at 150, the cost of OPD is 582. So we would say that the chamber model was probably better, but here you are spending for tomorrow. So essentially this has a advantage of going from 20, 30 patients a day to 50 patients to 100 patients. But that one probably is not. It is a linear model and you will not grow. And so essentially at some stage, this model will become viable with this. So now let us see the investigative costs. So I would just concentrate on the OCT maybe. So let us say 10, so the cost of the equipment, 20 lakhs. So if you are seeing 30 patients a day, the cost of the equipment would be 900 rupees, the 500 rupees with 50 patients, and you can hit Disha's rate if you are seeing 100 patients. So we are profitable doing OCT for one eye at rupees 300 rupees. These are economies of scale, as I was explaining you. So now we come to the IPD cost. Here we are again considering 1,000 square feet of and at 75 lakh rupees, and the equipments are microscope, phaco machine, sterilizers, etc. And this costs 75. So if we put it, the cost of surgery, if you are seeing 30 patients, the translated cataracts would be, and the cost for each establishment cost would be 11,000 rupees or 12,000 rupees. But if you are seeing 100 patients, it comes to 5,000 rupees, which is less than what the surgery center charges you. So you become almost break even here, but you become profitable here. Here is a forward spending to be to 50 patients a day. Without this, you don't be to 50 patients a day. So if we translate this to actually add the lens cost, suppose we add a lens cost of rupees 6,000 rupees. Always, if you are charging on the lens, add a profit or a handling charge, because it will cover up many other expenses. And so we have, though it is a 6,000 rupee lens, in cost calculations, we are putting it at 7,800, and therefore the cost of a standard technis or an IQ would be around 32,000 rupees for this scale of practice. But at this scale, it would come down to 24,000 rupees, which is the Disha rate. So this is how economies of scale work. So price considerations, it is mostly that we've seen that people try to price their services, on shadow pricing. But I think it is more important that we price ourselves more on these considerations. As I was telling you, that 3 times the square feet area of the residential area is a good cost. Then the segment we want to serve, that the staff can avail the treatment, then it must be prospective. We must think of profit, and if our goal should be that we should, when we start practice, that we must be earning as much as we were earning on job. So that is all. And let us break even. Let us not run at a loss. That should be a safe enough goal to follow. And then the costs must be realistic. As I said, we must enter into all the breakups as per the profit and loss, and as per the calculations I showed, how many patients would give, how many interventions, so what would be the cost, which machine can we afford, etc. So then is the OPD, as I told you, and any discounts, of course, those things will be there. Free services, promotional services, and training, which is not consumed in the practice. Like if I'm training a youngster, he should start work or she should start working with me. Then the costs and the time spent is justified. Otherwise, it should be treated as an expense. And obviously, as we understand, lower the price, better is the compliance. Now, I'll give you a rather macro understanding of how the entire whole thing of the profit and loss happens. Like suppose if you have invested 100, your turnover should be 100. This is important. I have not written it here. If the investment is 100, then the turnover should be 100 in 3 years. Now, how does this 100 break into? 20 goes to infrastructure and equipment, where infrastructure is calculated on a repayment of 10 years or a equipment of 3 years. Why we take it as 3 years? Because the rest of it can be adjusted or taken into as profit. I mean, it is depreciation, but and replacements, maintenance, and staff costs. So we keep it. If you want to make it further down, you can break it into maybe 5 years. And staff and maintenance like housekeeping, security, lift, electricity, and all taken is 10 plus 10, that's another 20. And consumables is 20, and the doctors 20, and the profit is 20. So private practitioners say, oh my God, I'll just earn only 20. Well, that's something probably you have to do, but eventually it will become 40. And when this is taken care of, then it becomes 60. Now this is the 60 that you can play with. Now you can invest wherever you want to. Mostly business money should always be in the business. So it should be a second place or new equipments or whatever that you think is good for us. According to our turnovers, there is a rule of 6 for revenues, where 60% goes to cataract, comes from cataract, 6% from OPD, 6% from investigations, 6 from spectacles, pharmacy, injections, retina surgery, and other surgeries. And obviously, as we saw, prices can be made affordable through economies of scale. Now, this point is something that you can reduce costs by converting fixed cost into semi-variable. This is a very intelligent way. You are taking less risks. Suppose if you are taking a building on rent, and if you are taking a building which is owned by somebody, and you are saying that, okay, I am giving you a revenue sharing model. What does that mean? That suppose the rent of the building is 1 lakh rupees. You say, no, see, this is my balance sheet and this is my profit and loss. I earn this much. So I will give you 10% of the top line and it will continue to grow. So why don't you share your infrastructure? You can get more than 1 lakh if I do better. So that is how the revenue sharing model happens, which is usually practiced by major hotel chains, the restaurant chains, because they have brands. But youngsters also, some angel investor or your friend can actually enter into a revenue sharing model. You can have equipments on hire purchase, which is a very standard thing in the market, or which can be bundled with lenses. So this is how fixed cost becomes semi-variable cost, then letting out OTs, as we have already seen, and investigative appliances to doctors. And of course, high value staff and doctors can be kept on variable pay and incentives. So they need not be on a case-to-case basis. And any price change we have seen, it is very difficult to include something very drastic, like it's very difficult we are finding it very difficult to introduce femto and multifocus, because there's a sudden jump of 40,000 rupees of things over the existing cost. Now, to tell you a little about loans, we would see that how much loan should we take? I would say that if you are projected to profit, say 100, you should be taking a loan of 75. So actually you are, by taking 75 repayment per year. So in this way, you can actually be on the safer side. Suppose it doesn't go 100. So you are not burdened. But if you are more aggressive, you are safe enough to take 100. But if you overestimate the business and take 150, probably, you have to reschedule the loan, just keep on paying the interest. And of course, the banks would be very happy to do that. But because, the moment the job of the bank is to give loans, that is their business. To get fixed deposits into the bank is not the business. They have to lend the money that they have, people have kept effectively. So the moment we only keep on paying the interest, they're pretty happy, because they don't have to look for another client. So, there are a lot of term loans. We have to do a good project writing, but, If it is your turnover is 30 lakhs, you can safely get about 30 lakhs of loan, but you won't get 5 crores. For 5 crores, probably you would require something around 5 to 10 crore turnover, and it has to be a 3 years balance sheet. And that is what I'm saying. Keep your accounts from day one, your profit and loss balance sheets. Sometimes we think that it's just to pay taxes that we need balance sheets. No, it is needed for the business. To understand your business, to understand how you are doing, you always need to do that. And the tenure you can actually stretch it up to 15 years. So you can well understand how slow repayments it can be. And so these are term loans. Medical equipment loan is a special segment. So again, these eligibility criteria are there, but you can borrow up to 5 crores, but you can borrow 20 lakhs, 30 lakhs. So that's very much possible. And these are all small business loans. And even working capital loans. Of course, this is more for a trading requirement than from our requirement. But the way insurance is going up, I mean, if your business has 70 or 80% of insurance, as I told you in the 2020 rule, if essentially your 80% of your business is, and that is deferred by payment is deferred by 3 months, then you won't have money to pay your doctors or your vendors or your staff. So you have to take a working capital loan, and you will be functioning on a working capital loan. So, and of course, there is loan against security, loans against property, which is usually between 60 to 70% of what the bank values your security or your property as. And these are all now rates are very low. So it's around between 8 to 9% you will get these loans. Now, this is a very busy slide, so but I don't want to put you into so much trouble, but do pay your taxes. You can have a snapshot of that thing. There is an alternative thing which doesn't take into account the, all the ATC and all that, but I don't think that is a better way. The older way probably is better, because if you see, yeah, for an income of about 8.5 lakhs, the tax is 10%. At 7.5%, it is this. So if you see that the comparison between the old and new tax regimes, so this is the advantage. So essentially, it is people are working up to, this will be available for everybody up to this range, but above this range, well, taxation is a statutory thing, and we all need to pay taxes, that is for sure. And these are the details. If you want to have a snapshot of it, you can keep it, because it gives you our taxation rules, how much you can save. Like, now let me quickly come to the wealth management. Here, first thing, my advice to youngsters would be that the first thing I find is that they buy a car. But I understand that the youngsters probably today are more Uber types. So it is perhaps more easier, more convenient, and you can have better convenience by hiring a car than actually owning a car and driving it. I think it's more stressful, but then as a scale of personal achievement or a thought or ambition of owning a car, well, definitely you can have one. Same is about having a flat. I would say it is better to stay in a rental flats. You get the best flats at much more reasonable cost than the EMIs. And so I would rather say don't invest in these two in initial years, because you still don't know where you are actually going to settle down. But one thing I would always say, that definitely have a life insurance, and I would recommend that you have a life insurance around this, which actually covers only life. So if you die before 75, well, this policy is okay, but it makes sure that you get some this 1 crore rupees, because you're going to die after 100 years, before 100 years. But this, probably you're going to outlive that and you're not going to get anything, but it covers a 1 crore life coverage from 30 years till the age of 65. So, and you can tip it up with an SIP. I would not recommend going into taking that money back policies, because in this you end up having you see that if you put this is what it would cost you, 1,600 rupees in term insurance and 10,000 rupees in SIP per month will yield you 3.5 crores at the age of 65, while you get 1 crore of life cover till the age of 75. So these are good things, and definitely we have a life insurance and have a health insurance, and then go ahead. I'm not advising you on health insurances, because I think you all know much better than that. Having these basic insurances in place, then you can I have heard that if you can actually take a low base policy, and if you can top it up with other top-up policies, probably those work economical. Definitely look into that. But what is important is to start early in having your life insurance and your health insurance, because, and of course, if you talk about wealth management, definitely, I see my youngsters in the hospital always investing into stocks. So definitely there are debts, there are mutual funds, and there are the stocks. So do invest at least about 15 to 20% in investments, which should include your 16,000 rupees here, and another maybe 15,000 rupees here. So 25,000 rupees, and the rest of the 75,000 rupees, I think, should cover a lot of things for a beginner. So essentially, mutual funds and debt funds are okay. They are less volatile, they're stable, but the stocks are interesting. And if you see, stocks over years on the long term has always given more than debt, always given more than fixed deposits, always given more than recurring deposits or any other mode of treatment. So keep a small portfolio of stocks. It is a good portfolio to be. Choose large caps. Because you don't know, you have to be really into the stock market to do all this in the small caps. But if you are in the large caps, you can always be there. So on the long term. So this has been our growth over the years. So essentially, what We started here, which was my practice, which was about 1 crore of rupees in 97. And then my friends joined hands and we moved on together. And you can see the curve was rising. The figure, as I was talking to you, it became 51,000. Then it became 93,000. At around this time, we were having 5 doctors. Then at this time, probably we were having 7 to 8 doctors. And you can see as the branches came up. So this was our first branch. You can see Shaurafuli across the river. And so essentially we followed the patients. So of the second hospital, as I told you, that whenever you have about 50 patients from a locality, you are ready to start a small hospital. So this will go over a 3, 4, 5 years term to 150, which is a good operating economies of scale. So, and then we had invested back into Polta, and then we went 200 kilometers off to Durgapur, and then we planned to be in the city. So these are strategic decisions taken by our doctors, talking to each other, and also on the data bank, looking into the data, where from are the patients coming, so where should we locate ourselves. So as you see, we, in this time, as we planned to be in the city, in 2013 and 14, we made 4 hospitals in the 4 corners of Calcutta. And then we tried to be in the city. And these are, of course, district locations. And finally, we clubbed this into our dream hospital, which is in Newtown. So this is how you must constantly keep on engaging with the surplus. All about growth in the financial side is what you do with the surplus. There is a limit to how much you can consume. So essentially, we must all look forward to creating value and the growth, because growth is such a thing which gives you continuity, which gives you propagation, which gives you the perpetuity, because that becomes the ultimate area. So this I wanted to show you only because of the Corona year. So this is 70,000 operations we did in 1920, whereas in the Corona year it dipped down to 55. Where the other surgeries we fared rather better, especially vitreoretina was a big help, injections and vitreoretina, where we did almost same, and our revenue drops, as you will see, hasn't dropped so much. So from 225 crores, 223 crores, we came down to 181 crores. So, and also at that level, we have profits. So essentially, it is always, there is a phasing away of practice, as I was telling you. So start thinking at 55. And it has to be an engagement with a youngster at 35 years and have a reasonable amount of association. And while the newcomer continues to buy into your practice, the senior can sell. And I think the stop limit would be 50%, because then it would become a joint venture where, both are equal holders of the profit and the responsibilities. And then by 65, 70, the elder practice can think of retiring. And in that time, the youngster will be 45 and will be in full bloom to blast his practice. There can be mergers also. Usual valuations is actually 2.5 to 3.5 times of the top line, but this depends on the growth of the hospital, how it is doing, what is the age of the consultants, employees, what is the brand of the hospital. So these are important considerations, and 10 to 15%, 10 to 15x of the profit is usual. The assets are usually kept aside. It can be if there are companies like us which have lot of grown out of internal accruals, their assets can be quite high because most of the buildings are theirs. Now, if you are engaging into a group practice, I would say that you must see the promoter's interest. He must be the senior most, he must be the most skilled, he must be the most resourceful, meaning he has the biggest practice, and there has to be some friendship or some alliance in some sort or the other, and the concept should be approved by the wives or the husbands, because unless that is done, this leads to problems. And of course, the promoter, somebody or a group should have a controlling stake, because that 33 is not a very good concept. So again, let us understand that why did I give you such a big lecture? The only thing that I have always realized, that cost is the primary thing. If something doesn't appeal to me, that this is not my hospital in terms I can't afford it, then it is not there for me at the first place. So of course, as doctors, I am always sure that we will give quality and we will not make quality compromises that are dangerous. And that is what I want to say, that, if we have low quality, it always sounds as if low cost is low quality. But if we focus on quality, then we will see that the fair quality appears and low cost is not low quality. So the best way to get to quality is through attending affordabilities. And the other thing is, try to simplify everything, and technology is for simplification, and ultimately for the people who are as visionary as they are. We understand, he tells, that simplicity is ultimately the ultimate sophistication. Thank you very much, and I'm here for questions for another 10 minutes. So essentially, it was a long talk, but what I wanted to convey is that there are certain thumb rules, like maybe, if you are planning your hospital. So what is the thumb rule? How much area should you require? For the one person, it is 2,000 square feet is good enough, which, half, 1,000 for the OPD, 1,000 for the inpatient's office and the operation theater. So essentially, if you propagate this further, that for two doctors, how many will we require? Maybe 3,000 or 4,000 square feet. So on an average, like if you calculate, we have, how much square feet do we have? Huh? Yeah, about 4 lakhs for 3 lakhs square feet. we have for $100. So that comes to, of course, there is some redundancy which is built, and prospectively we have constructed. Then commonly asked things are like, what is a good sum that one should look forward to start? Well, and I told you very specifically about locations. I think fringe zones are excellent. And like Barrackpur or Chuchuru or Kullani or, Dankuni. So these are semi-urban areas which you may have an inclination to stay in the city. So there you can actually, how is this timer going? So the fringe zones are very good, and they can be addressed from the cities, and we can have the best patient clientele, because the rural drain and the localities are usually dense. They have elderly population. The elderlies don't usually like to stay in the city, so they stay. And of course, it's very important to follow the migration of the population in the data dynamics. How are the populations migrating? Where are they migrating? And so these are important considerations. So thank you all for being with me over this session. And since we don't have any panel, so we couldn't take up any questions. So I hope all of you all the best. Thank you very much.
Thank you very much, sir, for finishing it on time. In the meanwhile, I don't know if you could answer it, but there was just one question by Dr. Sonal Shah. And the question is how to decide the costing of the operation.
Costing of the
operation.
Yeah, costing of the operation. Like essentially, it costs the infrastructure cost. So we have to take in. Suppose we have put in 1 crore for the infrastructure. So it has two components. 50 lakhs maybe for the equipment, 75 lakhs for the building. So building, you divide, take a 10 years perspective. So 75 lakhs, you divide it 10 years, how many operations are you going to do? Similarly, equipments, you divide over a period of 3 years. Then you add the staff costs, the consumable costs, the other factors, maintaining the hospital, like the housekeeping, the security, etc., add a portion of that cost. And so this is your total cost of that entire chain that I gave there. So this is the cost of the operation. Now, the most important criteria is how many operations are you going to get? So that is what I said. In a standard reputation, you get out of 15 patients, you get 1 cataract operation. When you see 15 patients in the OP, you get 1 cataract operation. And then, so these are the fixed cost and the semi-variable cost. And then you come to the variable cost, which is the cost of the lens, the tip, and the sleeve. So this is the cost of the operation, and now price it. Now put the cost of the doctor and then price it, keeping the margin of the profit of the center. So this is how we come to coming to the cost of a surgery.
Thank you so much, sir.
Thank you.
There are no other questions, so I believe that would bring us to the end of this session.
Thank you.
Is there anybody else who would like to add anything to this? Dr. Debashish? Is there anything? No. So that's it, right?
Thank you.
All right. Thank you so much. Thank you, sir.
Thank you.
With this, we come to the end of the session. And now there is going to be, the next session is going to be tomorrow morning at 8 o'clock. Hope to see you there again as well. We have Dr. Priyam also, and the moment she lights up and the whole conference does become bright. Just requesting Dr. Priyam.
Sorry.
Hello, hello,
No, no.
ma'am. Yes.
So thank you so much, sir, for investing time in this session. You've been the sole speaker, and there need not be anyone.
I tried as much as I could.
Absolutely, they're always. It's a pleasure that you're here with us, sir. Thank you, sir. Thank.
Dr. Priyam, there's one more question. I don't know if, since we have time, can I ask that?
Yeah, please.
Of course.
So the question is, what would be the idea size of OT for single doctor? Ideal size, I would say.
Yeah. So always the OT don't be stay shy to have a bigger OT. So 20 by 20 is a good dimension. You can reduce it to 20 by 15. That is fine. So that's about 400 square feet. But then you need a corridor, which is 6 feet by 20 feet. So that's 120 square feet, and an observation, which is around the same dimension. So that is why I said it's about a 600 square feet area for a single laminar flow theater. So this, and the additional thing would be waiting area for the patients before they walk into the hospital. Keep 1 or 2 beds for the bigger cases who would like to, or an elderly patient who would like to take rest lying down.
Right.
So there's another question from Sonali Shah, Dr. Sonali Shah. She asks, how do we decide on the costing?
That's already, Dr. Priyam, that's already
been
answered.
Okay.
No problem. So, thank you so much.
Priyam has a question. Does Priyam have a question?
I have several.
Dr. Sams, I can see Dr. Sams. Has he joined in?
Yes, we can see Dr. Shams Norman.
No, can we have the AV team upgrade him to the faculty link, please?
He is the panelist.
Sham sir?
He's also unmute. So
I think, no, he's not connected.
Yeah, he's from Bangladesh, so I think he must be having connectivity problems.
Karan ji, can you check for Noman sir ka connection?
नहीं, वो वहां पर वैसे तो दिखाई नहीं दे रहा है.
समझ.
कनेक्शन तो ठीक ही लग रहा है वैसे.
अच्छा.
मैंने रिक्वेस्ट कर दिया उनको.
हाँ.
जवाब नहीं दे रहे.
कोई जवाब नहीं. कोई बात नहीं.
ठीक है. Okay.
चलो. So I think Dr. Priyam, can we conclude then, because Dr. Debashish Bhattacharya sir has...
I think we are just on time. We had to close down at 3:30, isn't it?
Yes, sir. We are bang on time, sir. So thank you so much for spending time with us for this enlightening talk. And it's always good to have you, always. And we'll have you again next year, sir.
Thank you.
Thank you. Sir, one smile and one snapshot. Akbar.
Yeah, ठीक है.